But if you can come up with a system and buy the right property so you can keep tenants over a long period of time, you can keep the rents affordable. I mean, and people can prosper there. They can save some money up, maybe go buy a house one day, which is a lovely thing.
Welcome to the Real Estate and Financial Independence Podcast. My name is Chad Carson. I'm your host for the show, and this is a show all about investing in real estate, achieving financial independence, and doing more of what matters. Whether you're a brand new listener or a longtime listener, it's great to have you back today. The topic of today's podcast episode is old school tactics that still work in the 2021 housing market. For this topic, I had the privilege of interviewing John Schaub, who's been one of my longtime teachers. I consider him a mentor. I've been to a lot of his classes. I read his book, Building Wealth One House at a Time. And the way this interview actually came about, I was going on vacation to Florida, to Fort Myers, and I happened to be driving past Sarasota, where John lives. And we've been in touch over the years. And I just reached out to him and asked him if we could meet up. So I got to spend all afternoon with him in person. We had lunch. I got to tour a lot of his properties and ride around town. And then, of course, I asked if I could interview him and share some of his thoughts with all of you on what the current market's like, on how he would approach this current market if he had to start over. And by the way, he's been investing for over 40 years, I believe almost 50 years now at this point. And so a lot of perspective, a lot of wisdom. What's different about the 1970s, 80s, 90s, 2000s with today, but also what's the same? That was one of the questions that I really enjoyed listening to, was what is the consistent fundamental or the fundamentals that you should apply in any market. And so we had a wide-ranging discussion about, of course, the current market, also about creative financing, lease options, seller financing, some other things that can still work today. We even got into at the end a conversation about something I'm really interested in with affordable housing, where we play a role in that as investors, and also how different charities like Habitat for Humanity and the Fuller Center, which he's worked with, what role they play. So those are the topics we'll cover today. I hope you enjoy this special episode. Before we get started, I want to remind you that if you're new here, be sure to hit the subscribe button on your favorite podcast player so you don't miss anything. I have new episodes that come out every Monday morning. Also, each week I include show notes for this episode with any links that I reference during the show. For example, this week, I'm also going to give a couple links to my prior interviews with John Schaub. Episode number 112 was my original interview in 2020, right at the beginning of the pandemic. And then episode number 109 is my book review or book summary of his excellent book, Building Wealth One House at a Time. You can find a link to those show notes in the description of the podcast in your podcast player. Finally, if you like this show, we always appreciate your support by leaving a review on Apple Podcast. And as a way of saying thank you to those of you who already left a review, I give away a copy of my book, Retire Early with Real Estate, each week to one person who left a review. Please keep listening all the way to the end of the episode for this week's winner. Now let's get started with my interview with John Schaub. John, thanks first of all for taking me around Sarasota and getting to look at some of your houses. That was a treat for me to be able to do that. And I thought I just wanted to share some ideas with our podcast audience, just about some of your experiences. I think for somebody like me, I'm 41 years old. I've had 18 years of experience, but being able to look back at your experience buying for decades, different markets, different cycles, seems like from listening to you, there's some things that are similar, but then there's different markets that give you different opportunities and challenges. So I'm just wondering today, we're in 2021. What are some things you're seeing right now that are different, that are unique about where we are right now, that people, maybe just with your perspective over the last multiple decades, that people should be keeping in mind economically, just as an investor?
Yeah. Well, one thing that's happened, of course, which has made, I think, housing more valuable in more ways than just financial, is the COVID pandemic, where people really wanted to hunker down. They wanted a house. They left their offices. They left their places of business, and they did everything out of their house. And they learned they could use their house productively for more things than they were before. And that's made houses more valuable, not just financially valuable, but more emotionally valuable to these people. I mean, so folks, renters and owners alike, I think, have learned that house is a very valuable thing, and they don't want to give it up. We've had no turnover. We don't have anybody moving in and out. Everybody wants to stay. In fact, I told you on the trip, some people want to buy. They would like to buy the houses they rent now. And I'm not likely to sell my good houses to people. I keep a list of houses, and I know which ones are my favorite and which ones are my least favorite. So if I'm going to sell one, it's going to be toward the bottom of the list, not the top of the list. You don't want to, mistakes people make when they go to sell sometimes is they sell their best properties because that's the easiest one to sell. Well, if you think long term, you want to hold on to your best stuff as long as you can. It's going to make you the most money with the least amount of work. So today, with interest rates lower than I've ever seen them before, it's interesting. I've had some personal experiences. I don't borrow from banks, but I try to enable other people to borrow from banks. The rates are low, but it's still pretty challenging to get a loan unless you've got really good credit and not much debt and a lot of income. So they're not giving a lot of money away. Even if, they advertise 1.9 or 2.75, and I know somebody who just got a 30-year 2.75% loan, so they're out there, but you have to qualify for them. So I don't think we're on the edge of a bubble. People always want to know, are we getting close to the end? Is it going to crash? I don't see it crashing, but I do think at some point interest rates are obviously going to go back up again. There's a lot of reasons for that, maybe. But when they do, the houses that people rent will become even more valuable to them, because if they have to go out and buy a house that looks just like the one they rent, and rates go back up to 5 or 6 or 7%, their payments will be twice what they're paying for rent now. So the long-term outlook, I think, is pretty solid for both rents and prices, just because of demand and supply. We were driving through neighborhoods. We went through a half a dozen neighborhoods today, and I don't know how many for sale signs we saw, but there were just a handful, and I don't remember seeing any for rent signs, not a single one. So the housing market, and we're in a town of 55,000 people and a county of 350,000, so it's not a big city market. It's a sort of a suburban market, but the housing market in a lot of places, I think, reflects that the people are not moving much, and if they do change the tax laws to increase the tax on capital gains, that's one more incentive for people not to sell. So I think we're becoming a little bit more like Europe, where people just hold things for generations and generations, and families live together, and it's more and more of a European model long term over the next 10 or 20 years. So every town's a little different, but that's what's going on here.
And so just going back to some of what I'm hearing from your conversation there is that the basic premise, like of your book, Building Wealth One House at a Time, is that houses as an asset class are a really solid investment because people like to live there. They're desirable. There's plenty of them in every town. And so not only is that not changed over the last 3 or 4 decades, it might even be with post-COVID, people moving out of big cities. This is even more. So there's a tailwind behind owning houses. And then what I heard you say on the price wise is the lowest interest rates we've had ever, meaning there's a pressure on prices to go up at the moment. I mean, there's a lot of money out there. And so one of the biggest challenges, it seems like the flip side of that is, how do you buy a property that actually makes sense cash flow today just to pay your bills? That's a challenge a lot of people are having. But what I'm hearing, though, is that if you can do that, if you can figure out a way to buy it and hold it, there's some good reasons to think things could get better over the next in a good location.
Well, the people I see buying houses today who are younger than me, getting started in investing and getting started with their first house, can buy a house. If they qualify for a loan, get a 2.75% interest loan, they could rent that house tomorrow for more than their payments. They could have a positive cash flow right away. I don't know what their taxes, insurance, and maintenance are going to look like, but their payments are going to be very low because of that interest rate. I think we're creating a whole generation's the wrong term, but a whole bunch of houses with loans that have 2 and 3 and 4% interest rate loans on them. And folks aren't going to want to give those up. I mean, if rates go to 7% and you've got a 3% interest rate loan, you're going to have a hard time talking yourself into a 7% interest rate loan. I mean, and 7% is probably a lot more normal than 3.
Right.
So that's going to, again, that's one more factor that's going to decrease the supply of housing on the market, because people that have those loans are going to hold those houses. And I think that I have kids that are doing that. I have a lot of young friends that are doing that, and I'm encouraging them to buy. So even at these high prices, get those loans, because 5 years from now, you're going to look like a genius.
Yeah. Well, that might be a good jumping off point. I wanted to ask you a hypothetical question. So you've owned properties for decades, and you have continued to buy and sell and do some things. If you were to have to, go back in time, like rewind a little bit, and there's somebody listening to this who's, let's say they're 35 years old, they've got a job, they've just heard that, hey, this real estate thing is something interesting, and let's say they're in Sarasota, right in your market. If they're kind of in that starter phase where they have good finances personally, but they don't have a lot of wealth. What might be a general approach somebody like that could take if they're just kind of taking those first baby steps into the real estate market? And let's say they're looking for houses here in Sarasota. What kind of a approach might they take to get started here?
Well, the challenge is finding somebody who's anxious to sell and doesn't have 2 or 3 offers on their house already, you know. So you put a sign in your front yard right now, you'll have a dozen realtors call you the first day, and then you'll probably end up with an offer in a week or two. So it's a hard time to buy right now. I'm not going to make light of that. That doesn't mean there's not somebody out there who has a house that's been sitting empty for 6 months who would love to get rid of it and doesn't know how to, or lives out of town or whatever, you know. So there's always an opportunity. Certainly there's times like when I bought a whole bunch of houses in 1 year where there was a lot of opportunity because the builder had a whole bunch of inventory and couldn't sell it to anybody and didn't want to rent them. So in the long term, you look for somebody, and I think a major opportunity today, because I've trained lots of investors over the last 40 years, is look for somebody who's been in business for 10 or 20 or 30 years, who might own a half a dozen rental houses, but now they're in their 70s or their 80s, and they want to manage less, and the step one you might be able to just to take over the management and learn to manage. So I talk about lease options a lot, but you could lease option a house even if you don't have much money, and especially if that house was a bit of a challenge, either had a bad tenant in there or maybe needed some work, and you could turn that house around and get it rented to somebody, make some money off of it, and then maybe if you had an option that had a few years to run, you know, you could wait a little bit to close on it. And you could either close with your money if you could save it up, or you find an investor to put up some money, or maybe you can qualify for a bank loan. So you kind of have to work your way into it. But I would tell a young investor who, first of all, learn something about the business, you know, read my book. But once you learn something about the business, then you look for opportunity and you talk to everybody you talk to about houses, and you'd be surprised what you find.
So a lot of people are going the traditional routes. They're waiting to compete with those 7-8 people who are trying to buy through a realtor. What I heard, you gave one particular example, which I think is a great example. You find somebody who might have a situation that matches up to what your situation is. And I've done exactly what you just described, where you find a person later in their career who's not really interested in managing properties. What can I offer that person who's in that situation? I might be able to offer them management. Mm-hmm. And here, I'm going to put real numbers of this just so people can think about it. We drove by a lot of houses today that were $300,000 houses and kind of bread and butter Sarasota. Different parts of the country are going to have different prices, but those are just bread and butter ranch, 3-bedroom, 2-bath houses. Mm-hmm. Maybe I could go and lease that house from this landlord who's got, one at a time, just lease a property or two from that landlord at a rent that gets them about what they're getting otherwise. But then I could turn around and try to manage the property and lease it to a tenant in the house and get an option to buy that property for $300,000. So mm-hmm. I'm not trying to get a steal on the price. But if that property is something that appreciates to $400,000 10 years from now, that's a way to get in the business by offer. Is that kind of what we're thinking?
It is, and you've done 2 or 3 things right if you make that deal. Number one is you found somebody who may own multiple properties, and if you make one deal with them on the first house and it works well, and you pay them on time, take care of the house, there's a good chance they'll sell you something else. So you don't have to go out and look for properties if you find somebody already owns 3 or 4 or 5 who may want to liquidate over the next couple of years. The second thing is most people who've been doing it for a long time will probably have very low rents. Wouldn't be surprised that, the houses that I rent for $1,800, $2,000 a month are actually a little bit below the market. I'll guarantee you there's landlords in that neighborhood charging $1,400 a month or $1,200 a month who've owned that house for 20 years and had the same tenant for 20 years and just haven't raised their rents much. Well, when you find that house, that's the house you want to make an offer on, because you can do 2 things. You can say, look, you're only collecting $1,200 a month. I can pay you at $1,500 a month, and you turn around and rent somebody else for $2,000 a month. Everybody's happy, right? Except the tenant who had to pay more rent. Right. But the tenant gets to make a decision. They can stay or go, and so you don't want to take advantage of folks, but if somebody's way under the market, they're probably going to go. Right. People just can't stand the shock. But look for that opportunity. Look for the opportunity where people are undermanaged. That's what you've done with apartment buildings. You find something that is under-rented, undermanaged, and you turn it around. And you can do the same thing if you think about a group of 5 houses, like a 5-unit apartment building. A lot more money involved, but you can do the same thing with it. Turn it around.
Right. And the thing I think is another paradigm shift that I got from you early on reading your book and going to your class was that the financing makes a big difference when you're in a rising market like this, where the cash flow is kind of a tough nut to crack to figure out how to make the cash flow. Mm-hmm. You got to think more creatively with the financing. Mm-hmm. And I'd like to talk a little bit more about that. One example we just gave was a lease with an option to buy. There's a lot more to that, right? But instead of owning the property, this other owner, this longtime landlord, it might benefit them to own it for another 5 years because they don't want to pay taxes on it. So that's one example. Maybe we could talk about some others. I remember your stories when you first started. You did some, I don't know if it's joint ventures or partnerships with one third party where you would go find, you didn't have a lot of capital when you're early in your career, but you had this other person who had some capital, some money to put into a deal. You would go find the deal. They'd put up the money. Like how would somebody, if they had a similar deal to that, how would they structure that or how could they structure it with a person who had the money?
Well, let's go back to my original story there where we find an investor that has several houses and they have them under rented. That's the person you start with, right? Because they either might have money or better yet, they might finance those houses. It may not be a lease option. It may start out as a lease option, and then they may agree to carry back a 10-year note at 4%, which would give you cash flow, some terms better than you get at a bank. See, I never wanted to go to a bank. I never could go to a bank when I started. Now I can, but it's still trouble. If I go to a bank, the process of getting a loan is it's not fun to start with, and it takes time. So when you find a really good deal, or let's say you find an investor who owns 5 houses and they want to get rid of them. If you went down to the bank and tried to get 5 loans on those houses and close that deal, I'd tell you, it probably is not going to happen. Right. Probably not going to happen. But if you can make a deal with that investor to buy those 5 houses from them and pay them, and you can have a negotiated payment, negotiated interest rate. So then, if you start off low, if you say, look, you're only renting them for $1,400 a month today, so I can just pay you $1,400 a month now. But as I raise the rents in a few years, I could pay you $1,500 a month. In a few more years, I could pay you $1,600 a month. And you can overcome people's anxiety about the dollar going down in value and inflation by having graduated payments, not higher interest rates, but just bigger principal payments as you went along. So you have so much flexibility when you deal with owner financing. And what I found over and over again is somebody will finance one for me. They're anxious to finance more because I'm good pay. They like the way I manage. They like the way I pay. And if you're ever going to sell to somebody, the next day you'll worry about, will they ever make me a payment? So if you're the guy who makes payments on time and you're real, there's a lot of opportunity out there.
I think the people I've talked to, when I've tried to explain seller financing, you did a great job at explaining it. I think people, they get the concept. They say, well, that makes sense that somebody out there might do that. But if I've been buying houses through realtors, if I've been, had this traditional process I've gone through, you just described a situation where a seller did do that. Why would somebody in that case decide to do that? That owner who owns those properties, why would they not just go sell it on the open market, do something different? Like what? I think that negotiation piece, why would they actually decide to sell it to you instead of just doing something different?
Well, just take one house. Let's say we find one $300,000 house out there that somebody's owned for 20 years. They probably paid less than $100 for it. Yep. So they've got $100 in it. They're going to sell it for $300. If they sell it for $300 cash, they have to pay some of it in taxes. Okay. And probably it might be $50,000 or $40,000. I mean, a lot of money is going to disappear. If you want to watch somebody cry, you tell them how much taxes they're going to pay when they have to sell their house, So if you can show them a way not to pay that amount in taxes, that's step one. Number two, if they end up with, say, $260,000 cash out of this deal, and they wouldn't, because if they paid a real estate commission and closing costs and taxes, probably be more like $240 or something. So they've gone from $300 to $240. That's not going to make them happy. And now they take it to $240. Where are they going to put it to get the cash flow that you're willing to pay them? If they put it in the bank, they won't get anywhere near that cash flow. They can buy CDs, they can put it in the stock market, but most people who own real estate are conservative. That's why they own real estate. They're not stock market people. They're not gamblers. So if they put it in a CD, instead of making 3 or 4% that they were making before, they're only getting 1% or a half of 1%. Their cash flow drops by 3/4 or whatever it does. So those are the two answers. Number one, you can show them how they can avoid paying all the taxes up front by using an installment sale or a lease option. And number two, you can get more income. They have, most people invest in real estate to produce some kind of income for their retirement, right? So if somebody's making $6,000 a year or $6,000 a month off of 4 houses, and you can show them how they can get more than that and still make it a good deal for you, it's a win-win.
Yeah, so you showed them how you listened to them and you understood their situation just as well as they did, that they wanted retirement income, they didn't want to manage this property, and you placed yourself as the solution to that problem, either that problem they knew they had or a problem they didn't even know they had at that point. And then the third piece I would add that I think you talked about in the very beginning was that you're someone who's trustworthy. That's the wild card, is that people who've had seller finance to me, if I just came off the street and just said, hey, seller finance me a house, that's a little different proposition than them talking to John, getting to know you. Now it's almost like that trust that you have between the two of you is another currency. It's like that's a prerequisite, it's a foundation, but that can do a lot. People underestimate that trust between two people.
Yeah. And to that point, when you buy a house and get the seller to finance it, that's rarely a one-time meeting. Generally, you get to know each other over time, and sometimes 3 or 4 different times. And like you say, if they don't trust you to make the payments, they're never going to sell to you. I mean, if they think you're some kind of con, they're not selling to you. So you're asking them to have faith in you, to trust you. So you have to be trustworthy, or at least they have to think you are. And one way to overcome that
won't last long, will it?
Yeah. No, well, and that's why the lease option is often my first offer, and it's been a very successful offer over the years, because it doesn't require them to transfer title to you. They still own that house. So you have a contract that says you have to rent it for so much a month, and if you don't, they can get rid of you. And your contract says you can buy it if you pay the rent on time. So if you don't, you can't buy the house. So it really keeps the owner in a safe position. I've sold dozens and dozens of houses on lease options to people who had very little money, trying to get them into their first house. And some of them worked and some of them didn't. But the ones that didn't work didn't hurt me. I got the house back. And many times people, when they buy on a lease option, will take better care of that house than they would if they were just tenants, because they think they might buy it. So they'll do a little painting, a little landscaping, and do some things to dress the house up. And I tell people, if I sell to them on a lease option, don't put new kitchens and bathrooms in yet. Wait till you own the house to make that kind of improvement. But, take care of the house like it's yours, because it can be yours if you do everything you want. So, I've done a course on lease options. I've done a course on owner financing. You can see them all on my website. So go to johnschaub.com and see if you can find me.
I highly recommend them. I've taken just about everything John's got. So they're well worth it.
Yeah.
So going back through some of those options, somebody's buying today. I'm trying to kind of think of those people who are saying, I can't do it in 2021. One of the issues is you're going to have to think about the financing. We've talked about maybe offer a lease option. You kind of try to find owners who might be predisposed to be more likely to work with you on a lease option, or maybe seller financing. That's a great starting point. Let's say, though, you do find a deal, this $300,000 house, it's the neighborhood you want. It's a good long-term neighborhood. It'll attract good tenants, and you could pick it up for $250,000. So you just happen to find a deal like that, but this person wants their cash. Let's talk about another scenario. So what then? So I'm still a person who doesn't have a lot of capital. I'm a new investor. And I want to go do this deal and buy it for $250,000. Where do I even start there in today's market?
Well, you start by getting a contract with them, because a seller says $250,000, they can change their mind. So you get them to write it down that they'll sell it to you $250,000, subject to you finding the money. You can be just that plain with it, and within a certain number of days, 15 days, 30 days, give yourself some time that you can buy, but not a lot of time, because you want to put pressure on yourself to go find that money. And then you go to people who you think might have some money and say, look, I've got this great house. It's a hot market. We can buy it for $250,000. It's worth $300,000, but I don't have the money. Can you scrape up $250,000, or can you borrow $250,000? There's a way for you to get the money. And if you do that, you will own the house, or we can own it together, but you could own the house by yourself, and I'll take an option to buy half interest in this house. So if I do the work, I'll get half the profits down the road over the $250,000. And, you might have to knock on a few doors to get that done. But if you use a little common sense and think about who you know, and it may be other people who already own some real estate that have some money. It could be your local banker, your CPA, somebody else who has access to money. You can put that deal together. And I put deals like that together. I've had 5 partners, 5 people who put money up for deals in my entire career, almost 50 years. And then
that's amazing.
It's over and over again. It's the same guy over and over again. Once you make that deal, they'll go out and try to find the money for the next deal. It may not be their money, but you keep buying deals like that. And some of the properties I showed you today, I owned with other people to start with, and then I bought them all out.
I think that is, I've had a similar situation. I don't think it's quite 5. It might've been 6 or 7, but it's the same principle that the first house you get is kind of the toughest one, because you got to figure out how to do that.
Yeah.
The first amount of money from a partner or a lender, a private lender, that's kind of tough. But I always appreciated your attitude and took it to heart that if you treat that person better than you would treat your own money and treat it like gold, that relationship will just will flourish. It'll blossom, and it can make you both money for the rest of your life, and you can have fun. These are people that you could be friends with and have partners with and make money together. I mean, that's one of the most fun things I've ever had about my whole business, are the people I get to make money with.
Sure. I agree.
Okay. So I hope that was helpful for people, just to listen to it. This is not the end all be all of every detail of your deal, but the point I'm trying to get across, and I think John's wisdom and perspective from these histories, you've got to look at what your market's given you, but some of the fundamentals are the same. What the fundamentals that seems like you were buying in 1970, 80, 90, were to find a good house in a good neighborhood with good long-term prospects that'll have a good tenant. And then you figure out, based on what you're looking at today, whether it's 14% interest rates or 2% interest rates, you go with the times of what kind of money is available and what kind of opportunities are there. But the fundamentals of owning houses in good neighborhoods, that hadn't changed much, has it? I mean, is that still the game?
No. And I showed you a bunch of neighborhoods today. I would buy a house today in any of those neighborhoods. In fact, that's where I will buy the next house. I mean, I'll buy on one of those streets we were on today is where I'll buy my next house. I'm almost sure. Yeah. Because I just like those neighborhoods. I buy there on purpose. There's reasons to buy there. People like living there. There's no houses for rent on any of those streets, and that gives you so much confidence as an investor that you can buy a house and rent it. Right. And I learn how to manage. But once you get the right tenant in there, it works. It works.
Could we talk a little bit about the tenant management? I think that's something that is unique with your approach as well. That you have these houses and you have tenants. Some of them, you were talking about who they were. They've been there 20 years. They've been there 15 years. And yet you don't have a big infrastructure here. We're sitting in your office, but there's not a big tall building with lots of people, working for you. I mean, so how do people who, I guess my first question is, somebody who's thinking, wow, I've got to buy all these properties, that's going to be a lot of work to do that. And it is some work, but can you own 10 houses, 15 houses and have this be a part-time thing if you really learn how to do it?
Yeah, absolutely. Yeah, I think, I don't know what percentage of my students, but I'd say probably close to half of them have another job. They do something else. They're doctors, lawyers, carpenters, something, and they do this on the side. So it's really, we're talking, I manage all my own properties, and it doesn't take but a couple hours a week to manage all my properties. And I have quite a few of them. So, somebody with 10 properties, which is more than probably than most people should own, but with 10 properties, you certainly could do that by yourself. And, people do a lot more than that by themselves, right, but without doing it full time. You have to learn how to manage, though. You have to put people in houses that respect your house and respect you. You have to not charge too much rent. You want to be a little bit below the market. You want to have them want that house and have a financial incentive to stay in that house, so they'll fight to stay in that house. Now, jobs change. People get divorced. Things do happen. People do move. But all you want is like 80% of them to stay for a long time. Nobody bets 1,000. If you can get 80% of your tenants to stay 3 or 4 years or more, you're doing something right.
You're winning. And I remember the number in my own business. Every time somebody moves out, it's $500 to $1,000 every single time, because I'm having minimum. I mean, I'm having to paint walls. And so when you're having somebody stay 10, 15, 20 years, yes, there's some rent increases here and there, but you're winning big time. I mean, there's no turnover cost. Your house is going up in value. Mm-hmm. I'm just amazed thinking about how that compounds and what that does. But it all starts with what you're saying, is that having a good set of rules, a good lease, a good plan with your management. How are they going to pay the rent? I think you do a great job setting expectations on what do you expect them to do. Mm-hmm. Would you mind talking about that a little bit? What the relationship is between you?
We sit right here in the office and we talk for a while, and in a while, probably close to an hour most of the time. Mm-hmm. I want to get to know these people. And then 10 or 15 minutes, people might fool you, but if you sit here long enough, we talk about things long enough. If you're making stuff up, I'll figure it out eventually. Yeah. So you want people who are honest. You want people that have an income that is sufficient enough to pay the rent comfortably, but you don't want somebody who has too much income, because then they're going to go out and buy a house in a year or two. Okay, so it's kind of that you're walking in that area between people who have pretty good income but don't want to buy a house, or they can't buy the house they want right now. And I guarantee you, most of the tenants who live in my houses could not afford to buy that house. They might be able to afford to buy some house, but not that house. So if they're going to buy a house, they're going to have to go to a neighborhood where they can buy one for maybe $200,000 instead of $300,000, and that's a different neighborhood. Yeah. That's a little further from town, and the houses may not look so good there. So you might find that house, but it's probably a half-hour drive from here, not a 5-minute drive from here. So being close to things is important to some people. So when I buy houses, I like them close to things. And then when I rent houses, I do something that most people don't do, but I try not to rent to somebody unless they've seen the sign. I like to rent off of signs. I like to rent to somebody who's driven down that street and saw that house and said, we want to live in this house in this neighborhood. If they just see it on the internet, it's too easy to say, meet me at the house, or, and it just wears you out. So even if they come through Zillow or some internet site, I make them go out and look at the house first. They go look at the house. If you like the house, call me back. And if they won't do that, I'm not going to go stand in front of the house and hope they show up. Yeah.
Interesting.
I already have a pretty good tan. I don't need to get out in front of the house.
Oh, that makes a lot of sense. Yeah. I think I hadn't thought about that way, but if they're in the neighborhood, they want to be in that neighborhood. They've chosen it. They've been there. They have a friend in the neighborhood, perhaps.
Yeah. A lot of times it's a referral either from a relative or a friend or church or something. Something is drawn to that neighborhood.
My impression, just listening to you talk about your relationship with your tenants, it's not like it's your best friend or something, but I don't hear the typical landlord-tenant relationship I hear out there. You hear in the news, for example, it's going to be this adversarial. It's going to be a win-lose. One person is going to win over the other person. But I'm not hearing that. I'm hearing that you have these long-term relationships, almost like you do with your private lenders. This is a partnership in a respect. Is that an accurate portrayal?
I think so. My tenants don't love me, but they respect me. They know that I'm honest. They know I don't raise their rents aggressively. They know I fix things. I tell you, here's a couple things a really good tenant wants. Number one, they want a landlord who's not going to sell that house out from under them. Okay, so they want somebody that will say to them, we won't sell that house as long as you're living there. Now you might have to break that at some point in your life, but I've said that to people 20 years ago and they're still there, and because they know they're safe there. Okay, two, they want somebody who's responsive on the maintenance. So if somebody calls me and says my AC is not working, or my water's not working, or my roof is leaking, I don't wait 3 or 4 days to call somebody. I text somebody that very moment, and I'll have a commitment that same day for somebody to go out and fix that. Well, that's remarkable in the landlording business. Most tenants have to wait days to get the hot water heater fixed or the air conditioner fixed or something like that. Right. Now, I use common sense. If the window crank is not working, we don't break our backs to get the window crank fixed. But if the house has a functional issue, I'm going to take care of it. When I first started, I would probably agonize for a day or two before I call somebody because I was broke. But what I've learned is it doesn't get better. If the hot water heater is leaking, it's not going to heal itself, and it's probably just going to be more expensive to fix 2 days from now than it is today. So most of the time, it's smarter just to fix it as fast as you can. Tenant loves you, and it'll save you money in the long run. And I just have one thing a new landlord has to do is develop a list of people who are responsive, who will go to work for them pretty fast. And there's a lot of folks who advertise 24-hour service, but you have to hopefully find somebody who's not just some big operation, somebody who you can develop some relationship with. My people who do my work know me. They like me. And they like me mostly because I give them a lot of work and I pay them on time. We pay them right away. That's unusual too. If you're a carpenter and get paid the same day you do the work, that's lovely. Most people don't pay you like that.
Yeah, we're going back to this relationship thing. What I noticed with the financing, with the partnerships, with the tenants, with your contractors, that this is a people business, that they know you, you know them. Even if you're not best buds, again, you're treating people fairly, and it pays dividends to long run have these relationships, whether it's with your plumber, with your tenant. Everybody seems to win in that case. And yet that's not a sensational headline of be a good person, treat people well. I mean, that's not the number one business advice, but I'm hearing that to be one of the most important things for you.
I think so. And when you have tradespeople working, I bid people against them every once in a while to make sure the prices are right. But I think they take care of me, and I'm willing to pay 10% more to get it done today. I think it just, in the long run, it saves me money. And because if it keeps that tenant there one more year, that's a big deal to me. Like you say, that makes me some money. I look at it a little differently than you do. I think if a tenant doesn't stay about 3 years, I don't even break even. So if somebody moves out in 1 year, I know I lose money. Yeah. If they live out in 2 years, maybe I'll get lucky and rent it right away. But in a normal market, you don't rent it the same day. Today you could, but most of the time you wait a month or two to rent it, and there's 2 months rent out the window. So
yeah, my market's a little different. I'm in the college student market, which is over half of what I have. We pre-rent everything. So it's August 1st, lease starts. We have a 10-day vacancy period is built in for the turnover time. And then we lease it starting in January all the way through August. And so we don't have the typical single family vacancy period, but at the same time, we have a turnover every year or two. Like half of my college rentals this year turned over. So it's just it's more like it's not the hotel business almost, but it's a lot more like the hotel business than the single family business. So it's just a little different approach for sure. But I like the single family houses where people stay. It's
passive. If you're looking for a long-term, very passive investment, owning a couple of houses can be very passive. I mean, if you get the right people in there, I'll show you some houses today where you could tell people really like those houses and they're not moving. We'll have to carry them out, And my longest term tenant, I didn't show you them, but they've been there more than 30 years, And he called me. I could show you a text. I won't do it right now because I don't have my phone right now. But, I put everybody on a $100 discount. So they pay the first $100 in maintenance. And I just raised their rent quite a bit. And his air conditioner quit. So called the air conditioner guy, and the guy went out there, and the bill was $150. So he said, I paid the bill, and I'm going to pay the first $100, and you'll pay $50. I'll take $50 off of next month's rent. And I said, perfect. So, that's the kind of tenant you want. Tenant will pay the bill, pay the maintenance guy, coordinate with the maintenance guy. They're just good people. They're normal folks. And if you're renting normal people, every once in a while, you're going to get the wrong people in there. We've had the wrong people several times, but it's the wild card. It's like baseball or anything else. You don't bat 1,000. If you can get 800 or any place close to that, you're doing really, really well. So you'll make a couple of mistakes.
Just learn from your strikeouts. When you strike out or hit a pop fly, don't
do that
same thing. don't touch the fire. Don't burn again.
Yeah.
Well, I want to shift gears a little bit. I really think that was valuable to learn about property management and that managing properties is important. One thing I get when I'm talking to people about just the general idea of building wealth is they say, you know what, Chad, you're saving all that money. Why don't you just enjoy life? Like there's this perception that somebody who's building wealth and investing is not enjoying it along the way. And during my conversations with you today, it's not been the case at all. As I've talked to you about your whole progression of your career, I found myself to be the same way. I traveled when I was 27 years old to foreign countries. And so I want to specifically talk though, and see if I got this story right. When you were in your early career, I remember you telling a story that you would rent. Instead of owning properties, like owning your house, you would buy investment properties to rent. And then but you wanted to live in a nice house here in Sarasota. You're near the water. And did you rent a house on the water for a while? Was that?
I rented a different house on the water. I rented one house for 5 years, and we moved into this house and rented this one for 5 years, and ended up buying it after 2 years. When you find a good deal, you want to buy it, but if the person won't sell it to you, if you can live in a nice house for a lot less than what it cost you to own it, in the beginning, that's what you should do. And you and I have had similar tracks that way. We figured out how to live really cheap in the beginning. And, if you go out and you're a good tenant, you should be able to rent a house probably for below market rent. And if you can do that, and today's market's pretty challenging probably, but if you could do that, then you can live cheaply. And instead of, most people go out and they buy a house to live in right out of college or as fast as they can. And then they think they've made a good deal, but then they figure out they need furniture, and then they need other stuff, and then they need a new kitchen. And then, the just list never ends. So for the first 5 or 10 years of their life, they probably spend all their money on that house rather than buy investment properties. So I took a different track. I said, instead of doing that, I'm going to rent. I'm going to buy investment properties. And when I find the right deal, I'll be able to sell a few investment properties and pay cash for the house. And that's what we did. So when we bought our house, we paid cash for it. And that was 40 years ago. And, it's been free and clear ever since. So I encourage people to own the house you live in free and clear. And, you picked a house, but if you can do that, life is less stressful. You don't have to worry about making payments. You still have taxes, insurance, and maintenance. I mean, it's not free, but you don't have a payment to make. And same thing with your cars and your boats and your airplanes, all the fun stuff. I think the house you live in is a toy just like the airplane's a toy. So if you pay cash for it, it doesn't bother you much. But if you finance it, it'll bother you every day.
Yeah. And the other thing, I think there's a little taboo that we're real estate investors, therefore you have to own everything. But for your principal residents, especially those first 5 or 10 years when that compounding of money is such a critical piece and you got to afford to be able to be an investor, renting's okay. Like I talk to people in California and the Bay Area all the time, and they're telling me I'm renting, and all my friends are telling me I should buy a house. And my message is like, I'm not going to tell you what to do, but renting's just fine. If you're starting as an investor, do buy investments. Try to find an investment property you can buy. But I guess I'm just kind of relaying what your story I think is really telling, is that you were out there investing, buying houses, doing that, but you weren't but you rented your home for 5 years. I think that's really interesting.
Yeah, well, twice. So 10 years altogether. It just made sense to me. And I do the same thing over again. The house you live in is not going to make you any money until you sell it, or until your kids sell it, So it's a lovely thing, but it's not an investment, really. It's more of a toy than an investment. So if you own 10 houses and rented the house you lived in, if you needed some money, it'd be pretty easy to sell one of your 10 houses. Right. If all you own is a house you live in, you need some money, that's going to be a conversation. You want to sell the house you live in,
or borrow
against the house you live
in,
and you're going to lose the house you live in. I mean, the house you live in is an emotional thing. So if you rent it, it becomes a lot less emotional, and you won't spend a lot of money fixing it up.
Right.
People mess with houses all the time, spend lots of money. Ask me how I know.
Yeah, I've been there too. Been there. Okay, well, I'm going to shift gears one more time and kind of final topic. And this is not directly investing related, but I think it's important. And I know it's something you've done a lot of, and I've gotten more interested in too, is just this topic of affordable housing in markets. It's in the news all the time now that, we have an affordable housing crisis, that they're across the country. It's just really hard for a working class person to afford a house that is decent and they can live in. That's the story. And yet we've been in the affordable housing business. That's what we do. So I have a couple parts of this question. One is just the role of investors in that solution. Like, what role do we play in this conversation about providing affordable housing? Because I think we do play a role. I'm just curious what you've seen over the years as our role in that problem.
Yeah, I think all my tenants would say to you that the house they rent from me is made it possible for to live in that neighborhood. If there weren't any landlords in this town renting houses and renting apartments to people, not everybody can afford to buy something. So it's a critical piece of the housing supply is the rental properties. And if you're a good landlord and you charge a fair amount of rent, and you keep your tenants. I mean, the key is not having a lot of turnover. We both talked about this a lot. But if you can come up with a system and buy the right property so you can keep tenants over a long period of time, you can keep the rents affordable. I mean, and people can prosper there. They can save some money up, maybe go buy a house one day, which is a lovely thing. But without the landlords who do a good job maintaining, I think the landlords that cause us trouble are the ones that either don't maintain their properties, so the properties run down and the neighbors get mad at them, or they're charging too much rent. So they get tenants that will promise to pay them but can't pay them because they can't afford it. And then they end up evicting people all the time. We've had 5 evictions out of probably 1,000 tenants over 50 years. Very small number, because if somebody can't pay the rent, I'm dealing with people who we have a relationship with and we can talk about it. And unless you just disappear on me or won't answer your phone or won't answer the door, there'd be no resort except to evict. I won't evict. I'm going to work something out with you. Yeah. So you can be a good landlord. And I think, unfortunately, I think that the general perception of landlords is they're not good people. They take advantage of folks, and it's just not true. If you give them fair rent and a decent house to live in, you're a good landlord and you're providing a great service.
One new dynamic that might be added in the last 10 years, and you and I are both local landlords. We live in our community. Some people who listen to this will also be a local landlord, but they live across the country. But they're still a relatively small landlord. There's this trend of Wall Street buyers. It started with the hedge funds in 2008, 9, and 10, buying single-family houses. I've read a lot lately about big funds buying entire neighborhoods, new construction. Mm-hmm. Do you have any thought in this relationship with affordable housing or just investing? Do you have any thoughts on that, just that trend, or how that might affect some of us as smaller investors?
I haven't dealt directly with them, so I don't know this to be an absolute fact, but tenants that I've talked to who have tried to rent from them or who have rented from them and then rent from me don't like those folks. They don't like the corporate landlord because they're dealing off of an algorithm. I mean, to qualify to rent, you have to check all these boxes, and there's no. It's sort of like going to the bank to borrow money today. In the old days, I go to the bank. Mr. Bailey ran the bank. If I needed some money, he'd loan me some money. It was just that simple. Well, today it doesn't make any difference who's running a bank. They don't make decisions. They have to run it through the computer, and that's exactly how they're managing these properties. They're running it through some computer, and if you don't check the right boxes, they won't rent to you. And then they don't rent cheap, and they ask for a lot of money, and then there's extra fees. They can nickel and dime you. So they're not really my competition. They own a bunch of houses, thousands and thousands of houses, but if you look at the percentage percentage compared to how many rental houses there are in the country or how many single family houses there are, it's a minute percentage. It's not even, doesn't even show up on the chart. Yeah. So they don't own that many yet, but they own a bunch in the neighborhoods I showed you today. I know they own properties in most of those neighborhoods, not all of them, but most of them. And those are probably some of the properties we may end up buying at some point. I mean, the people that own them, there's a hedge fund or some kind of financial outfit. They get paid by buying and selling stuff. They don't get paid by sitting on things. They'll get bored at, they're making 4% of their money. They're going to get bored at 4% pretty fast. And they're probably somewhat happy with 4% now because nothing else is paying 4%. But let's say interest rates go to 8% and you can get 6% in a bond. I think they'll bail off real estate and go right to the bond market or someplace else where they can move that money around a little bit and make a profit on what they bought. And so I don't think they'll be with us forever.
Could be I'm hearing it could be a phenomenon of just the interest rate environment we're in. You can't get a good CD bond rate anywhere at the moment. So a lot of that money's being pushed into equities, pushed into real estate, and there's just another manifestation of that. Got it.
I think it'll change.
Well, one other affordable housing question. And so we're in the affordable housing business, renting to middle of the road, median income people. There's also, though, another dynamic of affordable housing even further down the rent scale. People can't even afford that. And you've been very involved in, originally the Habitat for Humanity, the Fuller Center. I think you've been involved both in the United States and international. I'd just be curious to know, how that market's different and the different approach as an organization you've had to take compared to what we do in our market, because there are differences.
Yeah, there's major differences. The people, I started buying houses which were very inexpensive, and I could rent to people who made very low income. But the problem was people who make very low income run out of money on a regular basis. So even any place close to market rent won't work for them, because if their car breaks down or the kid gets sick, they can't pay the rent this month. So I learned pretty quickly that I didn't have the heart and soul to rent to folks and tell them not to buy food, pay rent instead. That's not my deal. So I moved pretty quickly from that price range houses into a better price range houses where they had the ability to pay the rent. But I early on got involved with Habitat for Humanity back in the 80s, and then later the Fuller Center for Housing. And both of them provide for housing in partnerships with people who don't make enough money to buy a house, and many times don't make enough money to rent a house. They're in public housing. And my original goal when I got involved with Habitat was to try to get the government out of the public housing business. In this town especially, they were doing just a miserable job. I mean, you saw a housing project and it was scary. I mean, the people that didn't have air conditioners to work, nothing seemed to work in those projects, plumbing, air conditioners, and this is owned by the government. And so they were doing a terrible job. I said, we need to get those people out of there. And we got a lot of those folks out of there. We built over 175 houses here in town, and a lot of those families came out of public housing. And so we did eliminate a bunch of it, and we embarrassed the city so much over time where they actually got together and they've redone a lot of their housing, provided more decent housing for people. But people in public housing pay a percentage of their rent. The people in the Habitat houses and the Fuller Center houses pay a fixed amount, but it's based on just a principal-only payment for a certain number of years. So we started off by using a 20-year loan, principal-only payments. So if we were selling a house for $40,000, they were paying back $2,000 a year for 20 years.
Less than $200 a month.
Yeah. Yes, less than $200 a month. So we were able to sell that house to a family, or a lot of times single mom with a couple of kids, who was making maybe $1,000 a month, and they could afford a couple $100 a month. But if you're making $1,000 a month, you can't afford much. Yeah. So if you can get folks if you're in public housing and you pay a percentage of your income, you don't have much incentive to make more income. So if you can get people, and they understand this, folks live there, got this figured out pretty well. That's what they love the Habitat house, because they say, look, we can pay $200 a month to Habitat, and if we can start making $3,000 a month, we get to keep the rest of it. I said, that's right. So we made a lot of those folks capitalists, I think.
So you built 175 here in Sarasota. Obviously, Habitat and the Fuller Center have built thousands or maybe millions of houses other places.
Millions of people are living in those houses, yeah.
Is that, and I don't know the numbers on the need versus the supply. If the organization like the Fuller Center had, $1 billion dropped on their lap tomorrow, is that a big market of need for that price range? My assumption it is, but I'm just wondering how.
Sure.
Yeah. kind of dent we're making in that challenge.
Yeah, and it's funny. When we built the first Habitat house in this town, we had a hard time finding somebody that would apply to buy it because they didn't believe it was a real deal. They thought it was a scam of some kind.
Yeah.
It was just way too good to be true.
Right.
But once we got that first family in and the second family in and then built a bunch more, the word got out. This is a real deal, and it's a really good deal. What Millard Fuller, who's the guy who was the founder of Habitat and the Fuller Center, says that the poor need capital, not charity. He said the poor are not looking for a handout. They're working hard, many of them. They're hard-working people. They just, they're stuck in this job, and that's all the money they can make. But if you can give them capital, if you can let them build a little capital by helping build their own house and then making payments of principal only on it, don't charge them any interest, then they'll end up with some equity. And a lot of these houses that we built are paid for now. And people have paid these houses off, so they own a free and clear house. And those Habitat houses that we built and sold for $30,000, $40,000 are now worth $100,000, $150,000. So everything went up. I mean, it's not things going up so much as the dollar doesn't buy as much as it used to. The dollar went down in value, but they own that house free and clear. So they're set, and their kids can grow up in that house and go to the same school. It does a lot of things.
Right. It seems like that model's worked well. You've been doing it for a while now. What are the biggest obstacles to that being scaled even more? Is it capital? Is it the structural challenges in a town? We talked a little bit about that, how hard it is to get a city to actually let you build affordable housing. I'm just curious if people are interested in this, which I am, like what are some of the things on a structural level that are making this difficult to solve this problem from the Fuller Center's standpoint?
Well, people on the boards many times want to build a better house than they need to. They want to build a bigger house, a fancier house than is really needed on the other side. I can show you pictures of some of the stuff we built in El Salvador and Nicaragua and Honduras and all third world countries. And those houses aren't much bigger than my office here. And they're bigger than my office, but not much bigger than my office. But they have just a couple rooms in there. You've seen some of them, I'm sure. They just have a couple rooms. They have a cook room outside. They're very basic houses. When we started building Habitat houses in this town, we built something that was basic for this town. It was a 3-bedroom, 1-bath house, no garage, no air conditioning, a real basic house. And people pretty soon said, well, you need to do better than that. You need to put air conditioning in. You need to put a garage on. You need to, give these people a room to store stuff. And you have to get your head around this, but there's a lot of folks that don't have much stuff to store. They're just trying to get out of the rain. They just want a safe place to live inside. And air conditioning is a luxury some of them can't afford because air conditioning is expensive to operate, to fix and all that. So you'll see a lot of these houses that were built by folks who are trying to do good, and the air conditioner now doesn't work, so now they have all the windows open, but the house wasn't designed to work without air conditioning, so it's a double problem. So we used to build them with porches, a lot of fans, a lot of ventilation, so they would work, so they work without air conditioning. And throughout, and you drive around, you don't have to go too far from Clemson to find people who are still living in houses without air conditioning. They're very basic houses, and they work. Some of those are very functional, and other people would be happy to have that house. There's so many people that just can't break through the barrier of buying that first house, and that's kind of where my heart was with Habitat and the Fuller Center, is helping people get that first house who are hardworking, honest people. They just don't have the cash or don't have the credit to ever qualify for a loan.
So it's the capital problem. I love that. I'm just gonna write that quote down. That this is not a work ethic problem. It's a capital problem for a lot of people. It's not an
honesty problem. It's just they just don't have any capital.
All right. Well, this has been, I love talking about these things, and I want to wrap it up by just reminding people when I first met you in person at an event, I had your book, and when you signed your signature on the book, I believe maybe you still do this. You wrote, "Build wealth, enjoy it, and share it."
That's what I write.
And I think that's such a great motto. I've taken that to heart. And can you talk to us what that means to you and why, because I think it's a perfect way to wrap this up.
Yeah. Well, building wealth is fun to do. Everybody's in this business who does well at it and learns how to compound their capital and increase their balance sheet and increase their cash flow and do this independently of anybody else, knows what fun that is. And we help people all along the way by buying houses from people who need to sell them. And then we rent houses to people who need to rent them. So, I mean, it's happy on every account. I want to do something that makes me feel good at the end of the day. And what I do does make me feel good at the end of the day. So that's the building wealth part. Enjoying it, the nice thing about the real estate business, owning property, is you get to kind of set your own calendar. So if I want to take a day off, I can take a day off. If I want to take a week or a month or a year off, you can do that. I know you've done that. I've got another good friend who moved to Greece for a year with his family, and it's a unique thing that you can do because you're not holding a job. You get to choose how much money or how little money you make each year by how much you work or how much effort you put into investing.
When you enjoy, you have your schedule. I know we talked about that earlier, but it's not only the money that gives you that ability to enjoy it. You buy toys, but also you have that time to do those things that you're talking about. You
have time to be with friends, be with family, do things that most people don't ever get a chance to do. And then to share it, to share your wealth, charity is a wonderful thing, but then share your knowledge with other people. So I encourage people to write. I encourage people to teach. I encourage people to hold seminars, do whatever it takes. But, the more people we can get invested in the housing business and doing it well, the better off we're all going to be. Better for the country, certainly better for us as investors.
Well, I've certainly benefited from that, from you, John. I really appreciate your generosity of knowledge and time today, of talking with us here today and showing me around town. Really appreciate it, and look forward to following up again in the future.
Good. Look forward to it too.
Thanks, John.
Take care.
I hope you enjoyed that interview with John Schaub as much as I did. As I mentioned in the beginning, I have show notes for this episode where you can find links that we referenced there. You can get that link in the podcast description and your podcast player. And if you're new here, please consider hitting the subscription button in your favorite podcast player so you'll be notified each Monday morning with my newest episode. And if you like this show overall, there are a few different ways you can support me and to keep the show going. The first is to leave a review for the podcast on Apple Podcast or your favorite podcast player that has that option. People read these when deciding to listen, and it helps us to get discovered. The second thing you could do is to subscribe to my email newsletter at coachcarson.com/REI toolkit. New subscribers to my free newsletter get my real estate investing toolkit, which includes things like my closing checklist that I actually use when I buy properties, a deal worksheet, a tenant screening checklist, and lots of other goodies that'll help you on your journey to financial independence using real estate. You can get it all for free at coachcarson.com/REI toolkit. And the third thing you could do to help support the show is consider joining one of my online courses, which is where I personally teach and provide tools for you to become a successful real estate investor. The always available course topics include the rental property analysis course, real estate deal finder course, contract to closing, and many more. And each spring and fall, I also open my premier course and community called Real Estate Deal School. This is formerly known as Real Estate Start School, and this is where I help you gain momentum and buy your next deal. Find details on all these courses at coachcarson.com/online courses. This is also the time in the show where I give away a copy of my book, Retire Early with Real Estate, to one person who recently left a review for the podcast. This week's winner goes by the username edog22673 on Apple Podcast, and the review is left on 6/7/2021. Goes like this: Small town. Wow is all I can say about the most recent episode, number 169. I've listened to a lot of podcasts myself and love Coach Carson's interviews and advice. So cool to hear about people like me in a small town and investing in it. I also may be biased on this episode that I picked for the review, but they are a family and have helped with advice and getting us started in our FIRE life. Great job with all your podcasts, and can't wait to keep listening every week. So thank you so much for that podcast. There was a very particular review on episode number 169. I hope you'll go back and listen to that. It was actually one of my favorites too, talking about small town investing and impacting a particular small town in Indiana. So check that one out. And eDog, please send me an email at podcast@coachcarson.com, and we'll be happy to get you a copy of my book, Retire Early with Real Estate. I also want to take this time to thank some people behind the scenes who make this podcast possible each and every week. This includes my podcast editor extraordinaire, Michael Wen, my amazing virtual assistant, Megan Thompson, my wife, Carrie, who helps with all sorts of things behind the scenes, including the bookkeeping and listening to me very patiently as I talk to her about new ideas. And of course, thank you to all of you, the listeners of the podcast. This show exists because of you, exists for you. So I really appreciate you spending some time with me today. Everything I've shared with you in this episode has been for general education purposes. I have not considered your specific situation or risk. Before buying your own investments, be sure to consult a financial, real estate, and/or legal professional. Until next time, I'm Chad Carson. You can also call me Coach, and I'm your host for the Real Estate and Financial Independence podcast, which is all about helping you invest in real estate, achieve financial independence, and do more of what matters. See you next time.